So, namaste, my good friend. ¿Cómo allez-vous? How are you today? How's your trading? Up, down, turn around? Sorry if I yelled at you yesterday. I'm your mentor, not your friend, right? All right. Doot, doot. So, do you have the time to listen to me whine? Where's my drawing tool? So, hey, welcome to today's Forex trading strategy session. It's August 20th. Getting closer to the end of the month, 2015. My name is Wayne McDonell. I'll be your guide on this journey. Please stay on the ride. Keep your seatbelt locked. And the safety bar in the forward position. My name is Wayne. Hi. Look, two pictures same day. You notice in the background, I don't know if you can see it in the background on my screens, I'm looking at weather satellites. Yep. I can tell by looking at the satellite in the background, I'm not buying oil futures, I'm probably buying frozen concentrated orange juice futures by the direction of the hurricane in the background. Cool. Just plotting its trajectory. Hey, I'm with TradersWay.com. It's an ECN that wants you to win. Wants you to succeed. It wants you to learn how to trade successfully, develop confidence, and trade profitably for years and years and years to come. And they want to be your prime broker. What they're doing is investing into your education so that I'm here every single day. Isn't that awesome? The Traders Way, they offer many asset classes: Forex, energies, metals, indices, binary options. Come on over. We're waiting. Boop. Let's get going. Da, 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 da. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. The secret to success in Forex is compound interest, not increasing leverage. Okay, so I had a conversation yesterday about this candle. Okay, it had just closed, so this was in the Asian session. And this is a daily chart. I don't care what currency pair it is, USD yen. All right. So tell me about this candle. What's important? I can't zoom in anymore. What's important? Broke support. Yes, that is one. Definitely. Okay. The support would have been the one up here. We were above 124 for a very long time. Correctamundo. Okay. Is it? I guess it's been so long I don't even know what they call them anymore. It's amazing. Sorry, Alan. I'm trying to think. Morningstar. I've forgotten the names. I mean, it's so funny. I haven't heard Morningstar for probably 10 years. I can't even remember what it is anymore. Anyways, could be. How about that, Alan? Could be, Alan. Could be. What else? Bearish engulfing, absolutely. So on and so forth. Okay, so on a daily chart, how do you play it? Like, what are you looking at on a daily chart? Or I guess I should say, what should you be looking for or looking at on a daily chart? And what I look for, the only thing I'm looking at is this EMA, the 5 EMA. It's the only thing I'm looking at on the daily chart. Where is price now? So price was about here. It was right at the open. You can see it opened right there. And the only thing I'm thinking of is a mean reversion. Somebody asked me about a mean reversion the other day. Okay. And what it's doing, since it's bearish, I'm believing maybe perhaps this is turning bearish. And that it's going to go up, touch the 5 MA, and then continue in the direction of the trend. That's what I discussed in the Asian session yesterday. Okay, and that's how I use the daily, mean reversion. It goes back to the average. Okay, so notice this is yesterday's low, and this is today's high. Pattern. Down, retrace, extend. Okay, that's how you do it, yo. And so if you're eyeballing it, you're thinking you're going to short it around 124. Now, it turned south here. This is the Tokyo Open. Neat, huh? Shanghai brought it from here to here. Cool. So 8, 9, 10, 11, midnight. 1, 2, oh snap, London Open. And if you were using the mean reversion idea on a daily chart, you were hot to go HOTTOGO at that price. And the theory now, if you're a bear, of course, okay? Comprehendez-vous? And where in the scheme of things, did I just kill my whole drawing tool or did it disappear? Let's see. Oh, here it is. Okay, where are we in the scheme of things here? Well, not long ago, we had this move, 50% retracement, and wanted it to head down, right? And so we're caught here. If you're a bull, you're already in the trade, either because you bought the double, okay, or you waited for the higher high retracement idea and you bought that already. Okay, so that's how you'd play out the double bottom, right? And that's kind of the state of affairs here. If you're short, you're selling high. And this old support area is now your resistance. And we know it's also the 5 EMA is approximately in here. If you're a bear and you short at 20 on the retracement, okay, so think of it. If you're a bear and it's below 00, price goes up to 0020 area, what do? You sell. So if you sell at 20, where's the next level of support? We did this last week. 80. 80-20, guys. 80-20, 80-20, 80-20, 80-20. If you break through 80, it goes to 50. Okay? So if you buy at 80, where's the next level of resistance? $20. Do you guys remember this last week? No, we're not talking about fibs, we're talking about price. Okay, so we talked about it last week. This is 80 here, and it went up to 20 here. So now, if you're a bull, what you think it's going to do is basically come down to 00 and then launch up to 50. That's what a bull is thinking. Yeah, it is support and resistance, Mike. It has to do with where stops are. Okay. So for example, if a bull buys here now at the retest of 00, which is the psych level, where would the where are all the stops that the bears had? Because remember, the bears sold at probably 90 or 00, right? To that area, right? They sold because they thought it was going to go down. Like they thought 00 was going to hold, right? So where are their stops? If they're entered at 90, where are the stops for a bear? I read somewhere 1,000 years ago, and I can't remember where I read it or who's the study. I can't verify if it's true, but a little birdie told me that 85% of all stops are 30 pips away. %85 of all stops in the market are 30 pips away. Okay? And this influenced my sort of my thought process on what we're discussing here. So if you're short at 90, your stop is at 20. So what happens now if you're a bull? Because we know the bears, right? We know the bears want to sell it. They want to keep it below 00. And we spiked above it, but didn't hit their stops. But if price comes down now, the bulls do buy it, and they drive it above 20, they're going to trigger a lot of stop losses, and the market's going to jump from 20 to 50, and then hesitate because suddenly there's enough profit for bulls to want to take profit, and there's probably some bears that want to try again at 50. They failed at 90, they'll try again at 50. Well, the only problem, Igor, is wider stops are usually, the fool's hiding spot, right? But I can also tell you that if you're a half decent trader but can't seem to get past break even, it's because you're messing up your trades, and almost always your stop is too close, or you moved it too quickly. Okay? But bigger stops is not the issue 99% of the time. It's risk management. Which is different. I'd rather you leave your stop at, let's say, 30 pips, but let it sit longer at 30 pips than, you know, a lot of traders, as soon as they're up 12 pips, they jam their stop. So that's not good either. But to widen your stop to, you know, to cover your sloppy tracks is, I'm not saying that's what you're doing, Igor, but, you know, that's what a lot of traders do to cover their poor entries. I mean, that's all they do. Okay? Right. So that's, Pow, that's what they're, so that's just jamming your stop early. That's fear, isn't it? I guess, oh, and I want to make another point. A bear has already sold, right? Came down. So for the bulls that we know are going to buy at zero, because we just discussed why they are going to do it, where's the bullish stop if they're in somewhere between 10 and 0, 0? Just below 8. So if a bear now can get through that bullishness, or said differently, if not enough bulls buy, we'll drive it through, we'll get below 80, and it'll immediately drop to 50. Just boom, one giant candle, boom, we go from 80 to 50. Okay? Has anyone sort of inadvertently noticed that? That there's a lot of work around the cycle level, and then all of a sudden, boom, 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 it goes to 50. Right? 27 candles around the cycle level, and then all of a sudden, 2 candles later, you're at 50. Just boom. So that's what's happening, is you're just triggering stop losses. So pay attention to the 80-20, okay? Now, because I'm trying to play the mean reversion, I'd rather be down than up, although on the longer term, I'd rather be up than down. So I call that short, I'm short-term short, but long-term long. Okay? So, excuse me. This is my own personal observation. I don't think you're going to read that anywhere in a book. But, you know, that's something that I've discussed for, I don't know, many years. It might be in my book. I don't even remember. But when you enter a trade, there's a stop. And most traders trade relatively in similar fashion, because, you know, you just sell it, you sell at resistance and buy at support, right? I mean, really, it's not a complicated gig if you think of it that way. So you should be able to predict where the stops are. And then I'll move on to .com. Okay? Is it predictable that someone would buy at this gray area, or this purplish zone I have? And I'll back out and I'll show you, right? Okay? I would assume that that's pretty easy to see for a lot of people. So I'll zoom in. So somebody bought there is the idea. Where's their stops? Okay. Now remember, the proper way to buy a double bottom is have it bottom out, have it make a high, and then buy the fib, right? So I'd say if you were aggressive, you bought this touch of 0, 0, it was a 382. But our sweet spot is somewhere between the 382 and 618. Okay, this is what we do every single day. And so if you were a conservative bull, okay, you would have, if you were an aggressive bull, you would have bought the bottom. If you're a conservative bull, you would have bought the retracement after the bottom. Okay, so again, if your stops are here, or if your entry's here or here, you should be able to kind of figure out, right? So it seems to me there's going to be a lot of stop losses in here. Yes, Ron, but it's okay. But remember, if there's no news, it's 10:21. If there's news at 10 today, or like today, it'll be 10:34. If there's no news, it's somewhere between 10:13 and 10:21. Okay. So anyways, that's where I would suppose, is that a word, suppose? Suppose there's a lot of stops. So if you trigger that, this is going down in a blaze of glory. Take me out before I lose. So, okay. It's a fun game. Figure out what the other guy's going to do. In this situation, I often talk about playing poker. And, you know, a lot of the game is paying attention to what the other guy has or doesn't have. It's almost more important than the cards you're holding. So paying attention to the other guy on the other side of your trade. Because remember, every time you're long, your broker matches you with someone who's short. Somebody's going to win, somebody's going to lose. So you might as well figure out what he's going to do before he does it and have the advantage, right? I want to get rid of this because, oops, on the short term, I want this to head down. So I'm a bear. Okay. And remember, let me get rid of this. I'm a bear because in the Asian session yesterday, I noticed that this area in here is where the daily 5 EMA is. And I want to ride the 5 to the downside. What? Well, Joseph, everyone is matched. That's exactly what, I mean, there's always somebody on the other side of your trade, no matter how you enter the market. Okay? So an ECN passes you directly into the interbanking system and matches you. Okay? A proper broker, let's say, is a market maker. Okay? You know, broker is a market maker. So what they do is match you to other client orders. So they have this book, right? And they have all the bears and all the bulls, and they match you. But if there's not enough bulls or not enough bears to place your order, to offset your order, then they will take the other side of the trade. The ECN is just entering you into the market. Okay? Straight into the interbank. There's no market making. So anyways, mean reversion. Everybody got that? The last time I ever did like a workshop, oh boy, it would have been years and years and years ago. But I did it in Dubai. And the very first thing I talked about was mean reversion. Oh, am I still a bear? Oh yeah, absolutely. Let's talk about that. Let's talk about USD. Let's talk about you and me. Let's talk about all the good trades and the bad trades that may be. Yeah, all right. So we are approaching top, right? Let's do. Unbelievable, huh? All right, there we are. By the way, can I get some credit for not, being sucked in by the news media about September? I mean, haven't we always been talking that it's December, it's December, it's December? It's December. It's not June. It's not September. They were even talking about April, if you remember, right? And I was laughing at how dumb of an idea that was. So what's happening here is dumb money was trying to get in sort of front run, right? This stuff here, front run the Fed meeting. People are trying to position themselves for imminent dollar strength based on change in central banking policy, right, for normalization because of September. There are experts on TV that tell you that there's 100%, or there was, that there's 100% chance that the Fed was going to raise in September. Guess what? They read the meeting minutes, and they realized it doesn't look like September at all. Oh! So if they were buying the dollar because the Fed was gonna raise interest rates, you like my gonna? They're working on my American accent. If they're gonna raise interest rates, the dollar gets strong, so that means they need to sell a currency. So what currency pair do you think they were trading the dollar against? By the way, Marcia says she thinks it's going to be after winter. Yeah, so basically spring, right? That's how we say it here. After the winter season next year. Spring? I totally agree with you, except I think I heard Yellen say this year. Now, maybe if I misinterpreted what she said, then we'll find out. But I agree with you in the sense that I think it's too early. If I was on the FOMC, I would say it's too early. It's too early. There's global risks. I wouldn't mind some inflation, but I believe she said this year. So I said, well, then it's December, because December's too early in my book, so it just can't be September. So anyway, so I have to go off of that. I generally believe what central banks tell me, but it's not the perfect strategy. But it's all I got, right? So I try to go off of that. No, you're totally right, Marcia. Yeah, but it's not my job, right? I only have to, I have to take the facts as they're given to me. All right, so anyways, people were front running euro dollar. They were selling euro dollar because it makes sense. Why has euro dollar gone up for the last, I don't know, month? Why has the euro dollar done this? Let's see, third week of July, third week of August. What do you think? Coincidence? What happened? What's so important about the third week of July? Yeah, in fact, I actually said, and somewhere in here, I said, welcome to summer. It's usually like the week after non-farm payrolls, right? From the middle of July to the middle of August, it's Forex summer. Right? Like how much work has a Frenchman done since Steel Day? Yeah, we drink, we smoke, and then we drink some more, then we make love. Well, that sounded very Italian. Oui, oui. So anyways, that's summer, and everyone's already heavily short because we went from 140 to 105. And then we take a break. Okay? And people just get out of their trades. What trade did they get out of? No USD short. Boo-boo. Comes up, and then we're trying to roll this over. This is probably people trying to get in the game early on the imminent. This is the September trade. Now they just found out it's not September, so we're heading back up. And a lot of portfolios are misaligned and need to be rebalanced, as the language would go. But the dollar will get strong. Oh, the dollar will get strong. Just not today. Okay? Well, we are at a top, so you got something to do. But what I want to do on the longer term is wait for it to reverse. What's the big deal? Did it, right? What's the big deal? There's no rush. If it falls, it's going to fall fundamentally, which means it will fall in a trending fashion. I'm not surprised we consolidated in summer because we consolidate every summer. In fact, I was very happy that we went up here. We were blessed. We were blessed to have that opportunity. Because some summers we just kind of do this. So at least we had some volatility, but everyone was heavily net short. So good. So, but am I going to sell euro dollar? Oh yeah. Today? Maybe. So you see this thin gray line? That's Obama's line in the sand, right? It definitely won't go above there. But if it does, forget about it. Look where we are. So, you know, we want to pay attention. And if you are a bear, you want to find resistance. Beep, beep. Where is resistance? Find it. Okay. 2, find it overbought. That's where you use like an oscillator. And then 3, on a small time frame, look for a reversal pattern. Okay? And then 4, trade the next rally. Next. Sell. Sell. Next rally. Okay? Porque. So, I forget what porque means. Is it what or why? Whatever. So, what we want to look for is, okay, a top, boop, 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 and then, you know, and then a double top. Right? A lower high, lower low, retest, sell, sell, sell. That's why, huh? Yeah. Yeah, I only know so much Spanish. Dos cervezas, por favor. It's not bad. What else do you need to know when you're in Tijuana? Toque aquí. Muy dinero. Yeah. So there you go. So that's the thought, guys. Everybody got it? So 112, what are you going to do? You should already know what you're going to do. If you don't know what you're going to do now, you're not doing it right. Are you going to sell 112? And remember, the sell zone is 112 to 112.20. Okay? It's actually right up to that pivot. So, hey, look, if it's 123, fine, whatever. Are you going to sell there, yes or no? That's it. You don't have to tell me. I don't care. But what I care about is you've made the decision. If you trade it, if you let it go all the way up here and then blindly pull the trigger, you're a gambler. If you just throw down a limit order there and say you're going to sell it, you're a gambler. You got to know when to hold them, know when to fold them, know when to walk away, know when to run. Right? You're just a gambler, a degenerate gambler. Cool. Yeah, you might make money. You might lose money. Yeah, you'll probably make money. But that's what gambling is, right? Yeah, you'll probably make money. Give it a try. So what should you do? How about let it get to that area, drop into a small time frame, and watch it reverse. And then trade the reversal pattern. Okay? Somebody's defending the 0-0, huh? Yup. They're already thinking about it. So wouldn't it be interesting if you got a low now? Where is support? See, we know where resistance is. It's above us. But where is support? Well, what used to be resistance should now be support. So if we get a clear break of this, like if we head down here, it's a lower high type thing, right? Or, well, in this case, lower low. And then what? So. Okay. Because isn't there a reasonable probability or possibility that it still does this, boom, and then New York opens and we head up to the 20 area? Still quite reasonable, isn't it? So what are you going to do to protect yourself? Well, how about at least wait for a reversal pattern to say, well, I waited for a reversal pattern. All right. All right, fine. All right. Got lots of going on. My brain's going to explode, Papa. Okay, so where do you buy if you're a bull? Right there. Okay. It's suggesting that even if we have a down moment, it could come down and then up. It's going to take 2 hours, though, because this needs to cycle down and then boom. If it came down a little lower, you got 50 here, right? Yeah, well, the big news today is at 10. So what news are you concerned about, Oren? Weekly jobless claims? Right? It's coming. So, no, the big one is Philly Fed, right? That's all. Look, I'm just having fun with you guys, right? I'm not making fun of Oren. I'm just having fun. It's not the thing moving the calendar. So, when are we going to get real volatility today? The stock market open? For maybe 4 minutes. And then everyone's going to hold all the orders until the news comes out. So, on days like that, you get your trades in early at the London lunch. Okay? So it's going to move 7 a.m. New York time. Okay. You might get some activity around the commodity opens and stuff like that, right? Fine. And then it's going to move at 10:34. Now you'll get obviously volatility at 10, but it's undue volatility and it can go either way depending on how the news comes out. All that volatility will calm down and you'll probably trade your sort of your rational trade, not the emotional trade at 10, but your rational trade will come at 10:34. Okay? But like initial jobless claims, weekly jobless claims, that's not the big news on the calendar. So, right, do you expect something unusually good or unusually bad? No, it'll be average, right? So I'm just trying to help you, because I get this question all the time, Wayne. They say, Wayne, how do I know which news event's going to be big? Well, in this case, I'm kind of answering that. By the way, I got a couple of emails lately, and I want to know if it's sort of a measure of, sometimes if one person asks something, 10 or 15 people actually want to ask it too. And if 3 people ask, it might be 50 people, kind of thing. How many people want like a solid course on fundamentals for Forex traders? That's all it is, fundamentals. Hardcore fundamentals. You're like, Wayne, I got it. I got my own trading style. I got the technical stuff, pivots. I got it all nailed down. But, I just don't get the fundamental part. Okay? So, look, a lot of people. All right, let me change the question. How many people would pay $1,000 for it? Those are no, forget it. Well, look, if I gave you something like that and I spent, I don't know, 50 hours developing, probably even more than that, right? It would take me 100 hours of my time to produce like a 10-hour course, let's say. Right? I mean, you know what I mean? I mean, it's just like, yeah, I mean, just how much time does it take to produce a 1-hour educational video or course or whatever? You know what I mean? I mean, it's something, right? So, yeah, I wouldn't want to charge more than that, but I mean, right? I don't know. It's got to, I don't know. Let me know if you want, then I'll consider it. I mean, just seriously, just. So that. Yeah, you're probably right, Kareem. So I don't know. Just again, if you think it'll help and it's something that you'd like to invest in, maybe I'll invest some time into it and I'll do it. But I'm a busy guy. I got a lot going on. But I do want to know how to help, and so a few people did ask for something. So if you want it, let me know, and I'll do what I can, man. I want to help. Okay. So that's what a bull is going to do, is what I'm trying to show you. Well, I appreciate that, Stephen. Yeah, Marina. Yeah. I'd love to visit South Africa. Got to get out there. Go with my buddy Pegler. Is that right, Demeanor? So like I said, like that's exactly what I'm saying though, guys. You know, that some of you guys are paying $3, $4, $5, $10,000 for courses, and I'm like, really? So to me, it's just like I need to organize my time and put it all in there and teach you everything I know in a logical fashion. That's all. I mean, and so if you want to do something, we'll do something. All right, so the news came out. Was it amazing? Okay. All right, so now we got the lower low idea. So a bear is going to try to do this. Do you guys want me to be a bear? Jimmy wants to put it together. What do you think? Like, well, yeah, yeah. I mean, I don't know. Yeah, I mean, yeah. Wow. Okay. Well, well. Oh, hey. Speaking about devaluation, that's something that we've been discussing the last few days. Did you hear about Kazakhstan? Their currency fell by 23% today. Yeah, sucks to be Kazakh, huh? How about the Polish zloty? When the Swiss defaulted, the Central Bank of Poland had a lot of money tied up in Switzerland. And they lost, I think it was 30% of their currency's value in one day because of the stupid scumbag lying sons of bees at the Swiss National Bank. So isn't it interesting, guys, that China devalues unexpectedly, and the first thing we talk about very calmly and very casually, that if you are a hedge fund manager, you need to do something. You need to find other currencies that are exposed, and you need to sell them. Okay. Well, Predimus says hats off. Thank you. But I'm just trying to like teach you like the thought process, right? What if there's a massively terrible earthquake in Japan in the next 24 hours? First of all, pray for our Japanese friends. I have people I care about in Japan. And second of all, make money. So the first thing you do is you buy Japanese construction companies because they're going to get government contracts to clean up the work, to clean up the mess. And I'll tell you what, you'll have approximately 15 minutes from the time the earthquake is announced to do it. So there are fund managers that sit around in their conference room table, or in their conference room around the table, having strategy sessions, and they put procedures in place. So they'll start and they'll say, all right, let's start with the majors, right? Let's start with Japan. Something terrible happens in Japan. What do we do? You see what I mean? What do we do? What do we need to get out of? What do we need to get into? So what are we exposed to now? And then what's our alpha? How do we respond to the news, and how quickly can we do it? So we have to have policies and procedures, right? So if you read there's an earthquake, they should like basically either have a computer ready to go, or maybe there's like a book, right? They have a book, and you go to it and you're like, earthquake in Japan. So they grab the book and they flip over to Japan, right? Boop, 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 Japan. And you go through the thing, and you go through the list of scenarios, and you find earthquake, page 72, flip, 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 page 72. In the event of an earthquake in Japan, do this, do this, do this, do this, do this. You know what I mean? Like cause and effect. Just, that's it. So, for example, the United States announces an unusually large planting of corn seeds. This information is released. They actually track this. So it's announced an unusual amount of acreage this year has been planted to produce corn. 1, sell corn. 2, buy the substitute. You can't grow two things in the same inch of soil. Actually, the Aztecs did, which is really smart. But anyways, right, the Aztecs planted corn and beans together. So the corn stalk would grow up, and the bean would grow up the corn stalk. And then apparently, if you mix beans and corn together, they're unusually healthy. I think there's a third thing that they grow right there too to protect it from bugs. Unusual amount of acreage dedicated to corn. Sell corn, buy the substitute that can't be grown, which would be wheat. Corn needs more fertilizer than wheat. So if they normally plant wheat, but now they're planting corn, they're going to need more fertilizer than average. So you buy Potash Corporation of Saskatchewan, which just happens to be one of the largest producers of fertilizer in the world. They might need new equipment if they're normally a wheat farmer, but now they're planting corn. Well, they might need some new equipment. So you look at John Deere, for example. Maybe they're going to have unusually large sales. And there's just cause and effect, and it should be absolutely ridiculously easy to make money. All you have to do is think. So again, this picture, huh? You see this? The picture on the webinar here, this is years and years and years ago. I'm like a young baby here. Now I look more like George Clooney. So anyways, I'm looking at satellite data. And so what I'm doing is I actually watch it. That image you see, sort of the one with the light blue and the green swish. The green swish is actually the projected move of the hurricane. So I watch these things early on as they roll off of Africa, and they go into the Atlantic, and they're nearing the Caribbean. I track their trajectory, because if they come in low, the seas are warmer and more shallow. And then they hit the islands, and then they get pushed. So depending on where it goes, it'll land in the Gulf of Mexico, where there's 3,500 oil derricks. So I'll start buying oil futures. And once it hits the news, and CNN is standing, in Puerto Rico, and they're like, "Oh, this hurricane's terrible." Once it hits the news, then the hedge fund managers are going to buy oil futures. I need to be in 3 days before them. Before it hits CNN, I'm in the trade. Because I know as soon as CNN announces the hurricane is going to be horrible, it's going to be terrible, it's going to, it's going to cut off oil supplies, boom. If it comes in high, it's not likely to go in the Gulf of Mexico. It's going to come in and hit Florida. Frozen concentrated orange juice, because now it's threatening crops. Also, you might want to look at Lowe's and Home Depot, because if people's windows get blown out and roofs get taken off, they're going to need new supplies. Simple. Okay? Well, so on and so forth. So all I'm saying is, if you actually plan it out and think about it, it's, or I guess the other point I was making is that professionals do think this way, and they do have contingency plans. China devalues their currency. How are we going to make money? And I want you to kind of be in that process too. Who's going to win? Who's going to lose? Let's go. How do I make money? Where's my alpha? Instead of just following, what does the stochastics do? What is the stochastics? What's your stochastic settings? Right? Yeah. Yeah. I mean, there's just more to it than that. That's all. All right. So who's going to sell it? Anybody going to sell it? Huh? Anybody going to do it? Who says I should do it? Who says I should do it? Nobody? Well, the thing is, we're out of time. Our session's over. Okay. If we keep it below 80, it's going down to 50. So we'll have to save it for tomorrow. You want gold info, huh? Let's do this. So what's happening here? People were holding too many dollars. Gold's priced in dollars. Dollars weak right now because people overshot the Fed. This is more interesting. We're still precariously precarious. Yeah, man, 40, man. We're at 40. 41. Wow. What was that? Oh, the Euro USD? Oh, okay, we'll go back. Yeah. Well, there you go. So it's already moved 10 pips. I guess point taken, right? Cool. Well, I gotta go, yo, because I don't know. I gotta make some money. Gotta hustle the market. So we're now just about 45 minutes away from the equity open, and we got some good trading today, and we got some good news on the calendar. Let's talk about pips, baby. Let's talk about you and me. So I really appreciate the effort that you do and that you put into this career. I don't feel like guys, you know, waste my time, so to speak. You know, like I feel like we get together and collaborate as a team, and that you guys take this time serious, and you know, and I appreciate that. I really do. So I thank you for being on my team, and I thank you for being a client of TradersWay. And if it's not today, maybe sometime soon, once you develop some skills and some confidence, you'll choose TradersWay as your successful business partner. They'll execute your trades for you in the interbank market. Sounds like, is this a way to, yeah, closer? Yeah, well, you know, again, we talked about it on the high time frame first, though, didn't we? Where did we talk about it first? I can't remember now, but it's just, that's how you take the top. That's all. So anyways, hey, peace on earth. May the pips be with you. May your profits be above average. And like, just going back to that fundies thing, if you want me to do it, you need to make me do it. You need to, like, let me know that that's something you want, and I'll do what I can. I'll do what I can, you know? Maybe like we can, for a whole month, we can meet on a daily basis. Doing a, you know, advanced fundamental analysis course for currency traders. But that's all. But you got to knock down my door. You need to ask me every day. I need to rearrange my priorities, and so you need to make it happen, not me. Right? You sell me on the idea. I'm not going to sell you. So, anyways, hey, peace on earth. May the pips be with you. May your profits be above average. I'll see. Oh, is it Thursday today, or is it Wednesday? I never know what it is. I think it's Thursday, isn't it? Weekly jobless claims came out. Yeah, Philly Fed. Yeah, okay, it's Thursday. I'll be at fxstreet.com tomorrow. There are several hundred people registered. So grab your space while you can, huh? Yeah, James says, yeah, look, yeah, if a lot of people, yeah, if you know, yeah, I mean, I don't know, yeah, whatever. James is right. It doesn't have to be $1,000 if a whole bunch of people want to do it. Sure, I'm cool with that. All right, take care, everybody. See you tomorrow.